Hey, welcome to How to Sell a Business in 2026. I'm Joe with Legacy Entrepreneurs. Excited to tell you about what the heck is happening right now and what do I think is going to happen in 2026 and how does that impact selling a business. So there are four major segments to this video, and it's what the heck is happening and what does that mean for 2026. Then it's how will that impact Tennessee business selling more specifically, and I'll look at a few specific industries here. Or what can you do as a business owner to sell your business in this coming year or this year? And then how do I sell a business, which will be true for a lot of years, but we'll orient it towards 2026 as much as we can as well. So, these are the business selling stories to follow in 2026, and this is going to frame a lot of the rest of the discussion, right? So these are the big things that I think we're going to have to, deal with in this coming year. So here they are. It's inflation, tariffs, AI, recession, question mark, and demographics. So these are the big five. I think, the last one here, demographics, and we'll touch on this now, but then that is just kind of in the background of business buying and selling in general. But then inflation, tariffs, AI, and the possibility of recession, these are going to really interact with one another as we think about what's going on in the coming year, what to expect, what should we do, how should we prepare. And so there's kind of be a give and take, which is kind of be exciting. I guess that'll be the most interesting part of it. I don't know if maybe it's exciting or not, but at least for my crystal ball for the future, it's exciting to talk about. Although crystal ball, you tend to, that breaks into shards and cut you, is what they tend to say about it. So the first thing to talk about is inflation in the coming year. Do feel like things are less affordable. Inflation has been a little bit higher than the Fed target in 2025. That looks like it's going to continue. And that's going to be, that's going to put pressure on a lot of consumers in the economy in general. If consumers tighten their belts, we have a consumer driven economy. And so if consumers feel like, I don't want to spend as much, then that is going to be tough for all businesses nationwide. So, one of the things I think is interesting to take a look at is kind of Polymarket. I have a few markets that I've, prepped for, sharing with you today. So the first one, how will inflation impact us? How high will it go? Which is going to impact affordability and how much people maybe decide to tighten their belts and reduce spending in the economy. And, the you know, the plurality market consensus, or in not consensus, but the plurality in Polymarket is above 3%. So it looks like from 3 to 4%, about 36% chance according to this market. And so I think it is really worrisome that, there's a combined 21% chance, 24% chance according to Polymarket of like above 4 and above 5. Obviously, I think these are maybe a little overstated here. But certainly it does look like that there's a lot of people who think that it'll be above 3%. Notice that there's a not an under 3% here. So that may be forcing some of the market to overstate just by the way the market is set up. But again, I think the takeaway here is that we're not talking about 2 or lower, right? So all of a sudden that is going to be putting pressure on the Fed to raise interest rates, right? High inflation is going to put pressure on the Fed to raise interest rates. But we've seen the opposite happen, like as we end 2025, because of the weaker labor market. But this is going to say raise rates. That's what a higher inflation pressure will do to the Fed. But the next thing that I think it's worth taking a look at is tariffs and selling a business. So here's something from the St. Louis Fed. This is about 2025. But again, as we looked at inflation, so this is a whole article. I just want to kind of go down to the end here of, in 2025. So they're kind of getting this data as we end the year. This is core inflation, and they have it at 2.85% inflation for the year. And then here's a number that's also really interesting is that without tariffs, they would estimate that this is 2.35%. So this is where tariffs and inflation, one of those first two that are starting to interact with one another, is that the difference between this is about 0.5%. So in other words, it's about 0.5% of inflation that we experience in 2025 is coming from tariffs. And there's been discussion of, will tariffs be reduced for certain items? And if that does happen, that'll help bring down inflation, which will bring down the pressure of the Fed to raise rates, which would encourage them to maybe lower rates because of the weakening labor market that we saw towards the end of 2025. So again, interest rates, I've been talking about it. That was one of our, 5 things to, keep an eye out on. And so what do we think, is going to happen in Fed rate cuts? So interest rates and selling a business in 2026, interest rates, the lower they are, the greater access to capital there are. Multiples and offers from buyers tend to go up when interest rates come down. But at the same time, there's also, I think this is a bit neutral. It's probably a little bit in favor of sellers for rates to come down because that typically does lead to higher offers because there's more capital in the market. But, I also think there's a little bit of where now, buyers have more cash and it's easier for them to, to get money. And that's the same thing for small businesses, which means business tends to do better when rates are down and they can grow. So everyone's kind of benefiting in this situation when rates are coming down. So are there going to be rate cuts? Looks like, again, looking at Polymarket as, a way to kind of gauge what people think is going to happen. And I like using this because I could just, this is what I think, but why would you just take that one opinion when we can look at the opinions of a lot of people? So there's, in this range here seems to be kind of a grouping of 2 rate cuts, 3 rate cuts, 4 rate cuts. So 2 to 4 seems to be where people think will land. So that's saying that I think that what I would interpret is that there's going to be pressure on a weakening labor market. And because of that, they'll want to lower interest rates to support the economy, to fill in more jobs, which could be an interesting dynamic of that will allow small businesses to take on more debt, access more capital. Same thing for buyers. But again, elephant in the room here is the labor market. That is not one of my big trends for selling a business, even though it does really impact this. So, that is something in the background that I didn't pick out as a top 5 issue that is going to really impact what happens here. The other thing that I also want to call out as we move into, artificial intelligence and that part of selling a business, right? Because, small business owners are putting AI to good use. And there's a lot of AI investment, going on later in 2025 and in 2026. But there's a relationship here as well of if you lower rates. And we have a lot of AI investment in data centers and a lot of the Magnificent Seven companies investing in data centers. And that's sucking up a lot of capital. That is allowing companies to not hire as much because they don't want to invest in people when potentially they can invest in technology long term. And you also have a, power grid issue as you bring more of these data centers online. Is that, one worry that I have about lowering rates is that allows more data center investment, which could further weaken or not really support the labor market. And so that's where I think the Fed has really kind of got a tricky line to walk of, well, if I lower rates and encourage data center investment, will that continue to weaken the labor market and put more pressure on, an inflation metric of, utilities and energy? So we'll see. But there are certainly, outside of the Magnificent Seven for, most of the small businesses that, I work with and see all the time are, being able to put AI to use in their small businesses, right? So here's a Wall Street Journal article. AI is essentially my CFO as one business owner. And that 58% of owners that they have served, that the Chamber of Commerce has surveyed, are starting to use AI. So that's certainly a buzzword. It is a growing trend. I would say here are the do's and don'ts from me on using AI in your small business. So do start finding ways to implement AI that make you more efficient or can reduce costs. Don't make big expenditures on it if there's no immediate return. Because if you're going to sell this year, for example, and then you make a big AI investment or whatever that may look like for your business in terms of technology application or infrastructure development, that is not going to necessarily, probably not going to have a return on investment immediately. And what a buyer will see is just a large expense or more recurring expense in this last year, which will drive down your profitability. And, it'll seem like you had a down year or not as high performing year. So I would not take on a big investment in AI this year if you plan to sell immediately. But do know how AI can improve your business. This can help get buyers excited of like, oh, I take this business that isn't investing in this aspect in it, and I make that investment and I capture that growth, and that'll be good for me. So yes, I'm willing to pay the high but reasonable price on this business because the current owner, you have defined how much more business this can do once I add these AI metrics into it. So that may be something you may look to your larger competitors to like, what are they doing? And then you can kind of duplicate that on a small business scale. Don't tell people that AI won't impact your business. Even if you really, really believe that, even if there's some evidence to it, that's one thing you want to be really careful about. It's great to say that your business is recession resistant. I hear that all the time. But then sometimes I hear, oh, my business is AI resistant as well. You may mean that in terms of, AI won't hurt your business, but definitely buyers are going to be skeptical of that and look for ways that AI can help them grow it in the future too. So next topic is a recession, question mark, and selling a business in 2026. And let's take a look at kind of what the market is trying to tell us. 27% chance of recession by the end of this year. It's definitely been trending downwards of likelihood. I think it looks like all the way in end of October, people felt that there was a 45% chance of that happening. So now it's down to around, a quarter. It's hard to say. There's definitely been some weakening in non-technology sectors, non-healthcare sectors. And I think, some might even say outside of those two sectors, there may already be a recession going on. It's hard to say, what are all the other factors going to do? And then, a possible recession, could happen or maybe is happening, but it's hard to say, right? And so that's where I would tell you you need to build options. When there's uncertainty, create options. So I think there are three key options to build. One is, the option of just selling right away, selling this year. So get ready, get a valuation, get your books in order. So regardless, you just want to be prepared. If that's what you're going to do anyway, then we'll just get prepared for it. Now, the second option is like, oh, well, if a recession is happening, if the economy is weaker this year, I'm going to wait it out. So if that's what you're going to do, or, that's an option to build, cash. You probably need to hold on to more cash than you have in the past. You're going to want to try and diversify your customer base early in the year if possible, land another big client or two, get away from maybe someone you're over indexed in so that if that one person reduces their spend because of recession, it isn't, existential for your business. Or if it, really does hurt and you can't diversify, you're holding on to cash to get you through the year. If you can reduce inventories of discretionary products, that's good. If you can just reduce your own spend in some other ways, maybe AI allows you to be more efficient and reduce spend. That's a good option to start working on this year. If you had a 2008 playbook of like, hey, this is what I did the last time there was a major downturn, start brushing off some of those lessons learned and seeing like what you can prepare for this year in case 1 in 4 chance that, a downturn does occur. Another possibility is, you could hire a general manager as well. This is something that I see of if your business is stable and will weather a recession, but it's just a lot going on. And if you're looking towards maybe an exit and getting out of the day to day, this is an option of the business could decline because of economic conditions. You're not going to sell this year, but you still need to reduce pressure on yourself personally so you can still take vacations and start going towards retirement potentially. A general manager, again, is a great intermediate step of increases your value, gets you out of the day to day, takes some pressure off you, and it allows you to wait it out, without putting so much pressure on yourself to maybe sell later. And I guess the big point that I would emphasize is don't let the economy dictate your plan. By developing options, you're not letting economic conditions dictate how your life is run, you have options to deal with it. So if you have a good financial planner, for example, they're going to make sure that you are not dependent on 2026 being like a great year or any year being just like one stellar year before you exit. Even if you don't get the maximum imaginable windfall from an exit, you're still going to be okay. And I guess that's kind of the big thing that I'm stressing here, is that maybe there is a recession, but if you plan accordingly, you can weather it. And hopefully that allows you to kind of pursue the ultimate plans that you want and not, you know, have to delay retirement significantly or delay exiting the day-to-day operations because of a downturn. So build those options now so that if something does happen, you can say, well, I'm still going to exit because I'm in a good position regardless. So the last trend that I want to cover are demographics. And this is why I just mentioned, like, you want to build options, not let the market dictate what you do, is, again, to the like silver tsunami aspect of business sales and business buying. The other part that I want to introduce is like the corporate refugee aspect that I think is developing, especially because of AI and the perceived lack of upward mobility of some, corporate employees of, well, I don't know how AI is going to impact me and my career, or I'm being pushed out or maybe laid off in the future because of AI incorporation into more corporate entities. So those are kind of two demographic pieces to take a look at. And, again, so if you're in the, here's where the population pyramid has a little bulge right here, right? So this is your, let's see, from 60 to 75-year-olds. So some have probably already retired and definitely retiring soon, probably retiring right now and approaching retirement, depending on the business, could maybe early retire. So those are these are the sellers. Still kind of a little bit of a bulge on the demographics of the seller's age. And what I hate to see is like, oh, I don't want to retire. I'm up here and I'm 70, but I don't want to retire because of the market downturn. Don't waste those years because of market conditions, right? Get a plan, get ready. And, honestly, if you're in the, this position bucket right here of, from 50 to 60, again, I also start planning now so that by the time you get to 60, 65, 70, it doesn't matter how the market turns out in 20, 30, 35, et cetera. You've got a good plan. So good financial advisor can help you with that. But for this year in 2026, this still matters. There's that silver tsunami coming up and transfer of wealth, et cetera, et cetera. The other part that, we haven't talked about traditionally in business buying and selling is I want to kind of call out, this area right here. It's a little bit of a bulge, right? So it's narrow and then it gets thicker here in the 35, 40, 45 range. This is where, I get calls from buyers who they're in corporate, they want to move out. And so I think this is like a corporate refugee trend that is starting to emerge that I think AI will accelerate if is not already the cause of, where, hey, I want to own a business, I don't want to be an employee for the rest of my life, and some individual buyers entering the market. So that's where, we see kind of a surge in demand of buyers coming from to meet a surge in demand of sellers. So that is kind of the, overall the first thing of what the heck is going on in 2026. Joe, what do you think is going to happen? Well, those are the 5 things and, what I think are important to know. And the next segment will be, how will all of that impact Tennessee in particular and some specific businesses and or industries in Tennessee? How will all that play out and what do I see going on in 2026 for them?
So here's why selling a business in Tennessee is possibly going to be different in 2026. Comes down to discretionary spending and access to capital. So, for example, here in Memphis, people are going to have money in the new year to visit Beale Street, come out, dine, go to festivals. Or is that going to be scaled back by consumers, which, can impact the bottom line of a lot of businesses? But this is not just for Memphis or in Nashville. People travel to Broadway. In Chattanooga, are they going to take outdoor trips? That's a big question as inflation continues to, make people feel like things are not as affordable. Even if businesses have a greater access to capital, we can expand that thinking, right? We can go into Clarkson and say, what is the manufacturing landscape going to look like? Will there be enough demand to justify, increase to capital spending, which is enabled by greater access to capital and better capital markets. Same thing for if you're out in Lebanon, warehousing and distribution. You may have greater access to capital, but will you take advantage of it? Is the market going to allow you to say, yes, this is a good time to make this investment right? And then again, criminal access is, good for anyone doing home services, that requires a lot of lending to expand. And, will homeowners say, yes, I'm going to take on these additional services, do more build outs? I think that's a big question in 2026 that will affect Tennessee businesses.
I hope you enjoyed that little bit of field reporting. That's what I think selling a business in Tennessee in 2026 will look like, or a little overview. So now let's focus on some more specific industries. What about selling a restaurant in Tennessee in 2026? I would say sell if the post-COVID years were good for you. There's higher inflation risk of recession, lower opportunities in this industry, in restaurant industry, to use AI to reduce your spend or increase revenue. So if you've done well post-COVID and you're thinking of selling, now might be a good time to sell. If you're a single location, you could find a buyer, especially if rates come down and SBA rates get a little bit lower, may make it interesting for a buyer to take your concept over from you. If you're a concept that's trying to sell as a portfolio play, though, that could be a little bit tougher. Lower rates can help. Some of the restaurant groups in town may, have greater access to capital. But at the same time, I know a lot of them are focusing on their own concepts and in very particular locations. Lower rates, which might help them make more acquisitions, that capital from those restaurant groups may be deployed to pursue other strategies that they've been working on that don't involve adding a portfolio concept. And, there is some data to take a look at, which, a little interesting. So from BizBuySell, for example, this is dialed for restaurants. So essentially, restaurants in 2025 were up, closed deals up 2%, even though there was a small dip and median sales price. Now let's take a look, though, at manufacturing in Tennessee. So I think, the environment for buying or selling, if you're a manufacturer in Tennessee, and let's flip this over to manufacturing. So manufacturing kind of stalled out in terms of transaction strength, significant headwinds, 11% year over year, median sales price drop 37%. So tough 2025. I think that's going to continue for manufacturing going forward. Again, if you want to sell, it's about focusing on the fundamentals and what is your personal life plan is kind of where I would advise on that. So it does really, I would say, the manufacturing will depend on what sector you're in, though, in the economy, and that will make a big difference. So, for example, this is back to the St. Louis Fed, impact on tariffs. I think one of those things is, in different, performance and impact of the trends that we're seeing going into 2026 depends on the industry. So again, if you are in the manufacturing of furniture and furnishings, I talked to a furniture manufacturer and their cost of goods went up 30% last year. So if tariffs come down, if there's pressure to bring it down because of inflation pressure, that might be helpful. If you're manufacturing for aerospace and defense, I think that's going well. I think you may see modest expansion. Machinery, auto, housing, construction predict weak to flat growth. Regardless, it's a tough environment because you'll need to decide what to do about higher continued costs. And you'll probably be keeping an eye on what's going to go on with tariffs. And will that bring your costs down? And I would say that if you are preparing to sell and you are a manufacturer and you're impacted by these raw material costs and inputs, you're going to have to make a tough decision on how much of those increase in costs are going to be pushed to your end consumer or your customer. And at the very least, you're going to want to be able in a negotiation to be able to say, okay, my margins went down, but this is why, and this is how much is from raw materials. You should be able to track a lot of that through your cost of goods sold. But again, tying it to why and what's going on. But on the other hand, there are some, opportunities to expand. So it's not all bad news. So AI coming to market, there may be opportunities for your supply chain technology. And if there are lower interest rates, you may be able to invest in that. So, here is a manufacturing outlook from Deloitte. And the takeaway from here is that, smart manufacturing operations, I think AI will play a role in this, can drive benefits, which honestly, in some ways, duh. But if rates come down, you may be able to make that investment. So I think that is where maybe it may be worth doing. But again, make that investment if you are not planning on selling. If you do plan on selling, just know what that plan is. You may not necessarily be wanting to be the one to take out the debt to do that, or lower your profitability, your personal profitability for the year, by doing some sort of technology or infrastructure expansion. Next, Tennessee warehouses and distribution and logistics. What does that look like for Tennessee business owners in 2026? Biggest opportunity is going to be labor. That's probably not new. You may have some benefit though from, as we looked at those possibilities of a recession, what's going to happen with rates. The labor market is, you know, kind of underpinning some of those things. I think if you're in logistics, you already know that labor has been a struggle. I think it's going to continue to be a struggle, but there have been hiring freezes, average turnover of 11.6. And even though the labor market is weakening in other sectors, at the end of the day, you and I both know that you can't just take someone coming from, food, bev, or restaurants and put them into a warehouse or driving a truck. And they're certainly not forklift certified or any of the other key things that you may need. And again, companies are still competing for a limited pool of experience and supply chain talent. So good labor is tough. You can reduce churn. That's one thing that is theoretically in your control. I know it's easier to just say that than to do it. Fortunately, I just can say it. I used to have that problem with having to execute on it. But some things you can focus on is there is the technology opportunity. I think there are a lot of AI applications for, the warehousing and logistics industry that don't necessarily have to be huge technology investments, although you could make it if you wanted to. But I would look at opportunities where, you can differentiate, specialize, make sure that your space is aligned to a particular industry or customer. That's going to keep you in demand. That's going to secure your contracts. And that is where there is continued opportunity in the space. Again, specialization is key. And I think you're starting, especially as places like Amazon and Walmart expand their operations continuously, you want to not be a generalist that gets displaced by that, but you want to specialize as much as you can if possible. Next, let's take a look at what about roofing in Tennessee in 2026? I would say diversification and sales optimizing. 2025 wasn't a great year for a lot of roofers. If you've survived 2025, congratulations. 26, like a lot of it kind of comes down to what is, you know, on the residential and retail side. Do homeowners have, do they feel like things are affordable? Are they going to put off that job? On the insurance side, I don't know what will happen with storms, but if you are not doing as much insurance work, then maybe you should try and work on that part of your market. And so again, diversification, sales optimization, that's what roofers should be working on. Also, do not resist the urge to expand your sales team, have good KPI, and make sure that your current sales team is hitting targets and working hard and incentivized to hit those targets. Not every salesperson is created equal. And if you have a good team, train them well, get them working. Once the season changes, get those door knockers out there. That's going to be important. So get a core team. And, there's also opportunities probably to use AI to keep your costs lower, because a lot of your administration is probably run by either yourself, an office admin, or maybe you have a PM doubling on that end. So you can help them out, maybe reduce costs where maybe then you don't need a second admin person or enough receivables person, etc. So I think if you're looking to sell though, and you're a Tennessee roofer, if you made it through 2025 and did okay, this is a good year to do it. I think that if you made it through 2025, you were profitable, you're in a good position in terms of like how your sales set up and, subs are, and you didn't, lose a bunch of margin per square, if that's attractive. So if that wasn't the case for you, then work on those things in 26 and then probably readdress that, the possibility of selling towards the end of the year. Okay, this brings us into the third segment, the large, part of this video, which is what can I do to sell a business in 2026, here are the top 3 things you can do to sell your business in 2026. Inflation or recession plan, capital projects, implement AI tools. So I've talked about, hold on to cash if you can, in case there's a downturn, look at, replacing costs with AI alternatives, perhaps avoid taking on big expansion projects until you have a better idea of, are you dependent on early year sales to make that investment happen? Do anything that you can to, protect yourself from downturns, or at least be able to track what that happens if it does happen when you're selling anyway, because you have a good financial plan regardless. You know, that's why I always stress a good bookkeeper, because if something happens, you can explain, well, this is what it is. It's not because there's just like something being hidden or incompetence. So the second thing is capital projects. If you're not as exposed to downturns like a distribution center or manufacturer with government contracts, then maybe it's a good time to replace capital equipment with lower rates if they do come down, right? So be prepared for that. If you have old equipment, that investment is a good one to make. That will be attractive to buyers of, oh, like I don't need to replace equipment within the next 5 years. That's been done. You'll be able to retain some value on your balance sheet by having new equipment, and that's going to be good for you as a seller, and buyers will like that as well. And then finally, implement AI tools. Again, if this is not a big investment for you, if there's just some adoption that you can take on, then I would do that. So especially in Tennessee on AI adoption, we can take a look on, again, small businesses embracing artificial intelligence. So I do think that, in Tennessee, here, darker colors, a lot of adoption, lighter colors, not so much. And look, Tennessee, kind of right here, 41 to 45. Yeah, about 46%. So Tennessee owners, I know we're not usually, tech leaders, and we don't need to be, but, we can start adopting a little bit more. And I think that'll be good to know. And again, know how you can adopt it at the very least, so a buyer can get excited about those possibilities post acquisition. So these are, in 2026, these are the top 3 things that you should know about your business if you're thinking about selling. 1, impact on revenue and margins due to material costs. This is going back to the tariffs as an issue for 2026, and will they come down at all, or will they remain? 2, the impact on revenue and margins due to insurance costs. So one thing I actually haven't talked about yet is that a lot of inflation, especially for small business owners, feeling the impact is on insurance. Know what your impacts are due to insurance costs and inflation. That's going to be important. And, especially on the insurance front, if your prices have gone up and you haven't reassessed your insurance options, that might be a good time to do it. So you can say, hey, we switched carriers, our plans are just going up because we hadn't reassessed our coverage in so many years. 3, again, is looking for AI opportunities. It's out there. I know it sounds like a broken record, but there are a lot of opportunities. There are a lot of new tools coming out, and there are a lot of, low cost investments that can have a return on your time, make your life easier, or the life of an office admin easier, or a project manager easier, that then lets you avoid, oh, boss, I need another person to help me with this. Like, maybe we can just make that person more efficient that you already have. So these are the top 4 things that you can always do when you're looking to sell a business, regardless of what year it is, right? So you've heard me say these before, but I'll say it again. Good bookkeeping. So, you need to know what your impact was from insurance or from tariffs. Good bookkeeper can help with that, because all your financials will be organized. You can pull that out fairly easily. Having a management layer is the second thing that I would recommend. If a buyer comes in and the owner is doing everything, that's not attractive to a buyer. So if you have a good manager, someone who's doing a lot of the day-to-day, that's a great investment. That's a great thing you can do to prepare your business for a sale. The third thing is getting a valuation. What is this business worth? So you can be prepared, your financial advisor can be prepared, and you have an idea of, when I go to market, this is what my business is worth, this is why. And then probably going back to those first 2 things, what you can do about it to make your valuation better. Finally, engage with a broker. Even if you're not going to sell right away this year, having that conversation of, what does a business broker do? What are buyers looking for? What are brokers noticing? Have that conversation regardless. See who you like, see who you don't like, and that'll make a decision go faster when you are ready. So now let's go into, how do I sell a business? And this is true in 2026, so there won't be as much kind of tailoring it to this current year, but just generally, all right, Joe, I watched the whole video. I do want to sell my business. How do I do it? So here's what you can do right now to sell your business. Grab your last 3 profit and loss statements, call a broker, get an opinion of value. You'll be able to talk through, here's my business, this is how much I earn, this is how profitable I am. A broker can give you an idea, hey, this is how much I think you're worth. And depending on what that opinion of value turns out, that tends to facilitate future decision making for business owners who are considering selling a business 2026 or in any year. Here's how to use a business broker in 3 steps. 1, working with business brokers, preparation. You and the business broker will gather all the materials, get the broker across, this is how my business works, what it is, all the ins and outs of it. Then the second step is marketing. The broker will put together like, okay, now that I understand everything and I have all the documentation I need, I'm going to create a package to communicate really well to buyers, and I'm going to create a strategy on how to get buyers interested in this. And when I reach out, why the buyers in my network are going to really want to take a look at this deal. And then finally, deal closing. So once that broker gets it marketed, they'll find a buyer, and then it's about getting the right deal structure, all the diligence done, and then all the way to a purchase agreement. Preparation, marketing, deal closing. If I could organize the working with a broker process into 3 steps, those are the 3 steps that I would organize into. And then it comes to, why work with a broker? Why, Joe, why should I work with someone like yourself? And these are 3 secret weapons that a broker has that, makes us valuable to the value of the business and your own time. One is we have confidentiality agreements and buyer screening. We have a buyer network, and we have a resource network. So buyers will come that maybe we haven't met yet, and then a broker will have a good system for confidentiality agreement, tell you about why you are a qualified buyer, how are you going to run this, how are you going to pay for this. So there's a level of screening involved, so we're not introducing people to you that are wasting your time. We also have our own buyer networks. So I'll just send like, hey, I know these 10 people off the bat would be interested in this type of manufacturing, warehousing, restaurant, roofing, etc. business. I don't have to wait for people to come to me. I'm just going to, tell them about it right now. So that's buyer network as a secret weapon. And then finally, just the general resource network. I talk about bookkeeping all the time and how it's really important. Look, I've had a business. I just did the books myself. They didn't look super great all the time, right? And so when I needed to be cleaned up, I go to a bookkeeper. And so I've got a good bookkeeper in my network. Fractional CFO, we have that. Hey, I'm going to hold on to my business, or I'm going to sell my business, whatever it may be. Like, I don't have a big family plan. I can introduce you to financial planners, estate attorneys. How do you manage this windfall? So for the value of the business as well as just navigation of your own life, I can, bring a lot of resources to the table and make introductions to you locally. The next thing to discuss about how to sell your business are, what I think are going to be the top 3 mistakes in 2026 that business owners make. Obviously, these are going to be mistakes of people who do not work with me because I am advising to do it now. One is AI avoidance, saying that, oh, it's not going to impact my business, there's no applications. But let's say even if that's true, a buyer's going to be super skeptical. Don't avoid the issue. Look into it. See where it applies. See where it doesn't. Know that going into the transaction, because that'll be at least a big upside potentially for a buyer to know about. The second is market-based decision making, which sounds weird, right? But what I mean by this is, make good decisions for your business based on the market, of course, but don't make big life decisions based on the market if you can avoid it, right? When you need to move into a new house, you want to be able to do that because you need a bigger house, a smaller house, not I got to wait for interest rates in order to make a decision. Similarly for your business. If you want to retire and get out of the business, don't just try and wait for another year when maybe it'll be better and maybe multiples will be different. If you're ready to sell and move on to the next chapter in your life, don't waste a precious year or two just trying to see what the market does. Do what's right for you and your life and your family. And then finally, the mistake I also see is that owners will be working too hard. Like, I can get a general manager in place, help you hire someone so that you're not doing all the day-to-day, and increase that management layer, which increases the value of the business and its attractiveness. I think one thing that'll happen this year is that there'll be uncertainty, there'll be opportunity, and owners are going to work really, really hard themselves when they could have someone else do that for them. So don't work too hard. Working too hard is going to be a mistake for you guys. All right. Like, let me work hard. But if you're on the verge of retirement or exiting your business, don't work too hard if you can avoid it. Right. Keep the business running, keep it profitable. But there are ways to do that without, breaking your own back every single day. So this is why now is the right time to sell a business, why 2026 is the right time to sell a business. As much as I talked about inflation, recession, tariffs, what's happening, the economy is not the worst, right? It's not bad. Now, I'm not saying it's good, right? I'm not trying to convince you of anything that you may not feel or believe, but the economy is okay. Like, we're not in 2008, we're not in COVID economy, we're not there, but we're not boom times either. And I know most small businesses don't feel like, everyone's going to the moon right now. But it seems okay to it seems poised to stay okay or to go down. So I don't wait to see what happens, because one thing that I haven't covered because I don't see it is that here are the factors that are going to lead to like a huge boom, right? So don't wait to see, oh, well, will we go into like boom times at the end of this year or early this year? I wouldn't wait for that. So if you're ready to sell, let's get a move on it now and do it while things are stable, even if there's a lot of uncertainty. Like, I just don't think that next year or into the end of this year, there's going to be like some huge boom. I just don't see the evidence for that. Of course, this crystal ball may cut my hands, as this video ages, but I think buyers who are looking to buy, they're capitalized, they're looking to make deals. There's nothing that's turning them away from that right now or having them like hold on to capital. So if you're ready, do it now. Move quicker in the beginning of the year versus waiting until later in the year. So if you are interested in selling your business, call the guy who can string together non-AI sentences and make a video and talk about what's going on intelligently. That's me. If I can distill what the heck is going on, I can do that for why your business is a great buy. So reach out to me today to discuss selling your business, how it works, how to sell your business in particular, what is right for you. If you need referrals to, good resources in the area, please reach out and let me know. So give me a call, email me, put an inquiry on my website. Those are the best ways to get a hold of me. Thanks, and I hope you enjoyed this and learned a little bit something about what the heck is going on right now and into 2026 and what do I do about it. Again, I'm Joe, Legacy Entrepreneurs. My North Star is always giving you advice on what is best for you. So reach out if you have any questions. Thanks.